Hello, my name is Greg Brown, and I am a registered representative here at VentureCo. Today, we are looking at how investing in markets with high barriers to entry is a hedge against market volatility, and specifically looking into the city of Burlington in Vermont's Chittenden County. Even seasoned real estate investors can miss opportunities based on macro sentiments. Our inboxes and timelines are flooded with soothsayers and prognosticators predicting the next recession, the next possible crash. I want to take a minute to remind everybody that despite the dreaded coming to the end of the real estate cycle, a very fundamental premise: humans need places to live. It is still possible to find sound investments at the end of a cycle. Clearly, investors need to be cautious and much more selective with their strategies. One of those strategies is to find markets that are historically recession-resistant. Markets that can be recession-resistant usually have some sort of economic driving force for that market. These drivers are not as sensitive to overall market conditions. Examples are heavy federal, state, or local government presences, military installations, universities, or significant hospital or medical-related employers. Another strategy is investing in areas with high barriers of entry. Submarkets that don't develop or add to supply quickly are by their very nature protected against the dreaded boom-bust volatility. Some of these barriers to new real estate development are zoning restrictions, including height, view, and high parking requirements, vocal stakeholder bases, strict sustainability requirements, and efforts to control urban sprawl. One market that fits both of these strategies is Burlington, Vermont. Burlington, whose housing stock is more than 50% rentals, has significant economic drivers that are recession-resistant. Besides being the largest city in Vermont, Burlington is consistently rated as a top 10 U.S. college town by Huffington Post, Travel and Leisure, and more. The greater Burlington area is home to the University of Vermont, Champlain College, St. Michael's University, and Vermont Technical College, totaling more than 15,000 students and 1,600 faculty and staff in Burlington schools alone. The UVM Medical Center, located across UVM's campus and other locations, is the largest employer in the state with 7,500 employees. Education and healthcare jobs are some of the most stable job sectors. Burlington also has high development standards and requirements born out of Vermont's historical commitment to quality of life, sustainability, and access to public spaces. This has created a pent-up demand that is still being felt today. While the national U.S. Housing Price Index is both volatile and heavily affected by macroeconomic factors, the Chittenden County Housing Price Index has remained steady even during times of economic peril. And the data bears this out. Even with a recent upswing in multifamily development, this bar graph shows new apartment units in Chittenden County by year. Vacancy rates, shown with the green line, have stayed consistently low. Compared to the national average, the blue line, that's an even more notable feat. Even in the Great Recession, Burlington, Vermont only suffered a 0.5% increase in rental vacancy rates, which haven't risen above 3% since the 20th century. From 2008 to 2012, the Burlington, Vermont market never experienced a vacancy rate over 2.1%, while the nation as a whole was dealing with more than 10%, and some markets were as high as 14.2%. These fundamentals make Burlington, Vermont a compelling multifamily investment opportunity, independent of where we are in the real estate cycle. As we can see, occupancy and housing demand has kept up with Burlington's rate of development. Over the 5-year period of 2012 to 2017, Chittenden County added more than 2,700 apartment units, which is more than a 5% increase in total multifamily stock. Meanwhile, the average vacancy rate barely moved. Burlington's population has been growing as area colleges expand their campuses and improve their facilities, and the area has spurred entrepreneurial development. The cost of living, specifically housing, has grown at a rate that is higher than wages, making Vermont one of the least affordable, based on national averages, states to find a home.
New development will help the area businesses attract talent and reduce the burden on the limited pool of housing options.